Welcome everyone to the Thunderstock Show. Today's valuable brainstorm will be about business growth strategy, personal branding, philosophy, and life perspectives. And we'll sprinkle in some personal and professional development because I think that's the output of your entrepreneurial journey. Today's special guest is Mark Anderson. He has been successful in independent derivatives trader for darn near a decade. He's got experience in data science, applied math, optimal portfolio construction. I'm not going to share the rest of the details, but you're going to find them out during this conversation. Mark, glad to have you on. What's it like down in Texas right now?
It's pretty nice. Like I've optimized life to just kind of chill and plug away at things that I think are efficient. So it's quite nice. I feel like I've escaped the matrix and there's no bureaucracy or expectations of things I have to do. And I could just focus on what's most efficient. And I think that expands my impact, what I'm looking to do.
That's a lot better of an answer than saying the weather's great.
Yeah.
So we're off to a good start already. I want to ask you, is this what you wanted to be when you grew up, when you were a kid? Like when you were in high
Uh,
school? What did you
no,
want what did you want to do when you were then that age?
like I was actually thinking about it. I was talking to my buddy the other day and I kind of had a realization. It was like, I was kind of like chosen on the wrong side of professional careers in 2020. Like I was working in construction, which obviously was not needed and kind of shut down for the beginning of it. And then I was just mad and like YouTube algorithms started showing me options and I was somewhat familiar with it. And it's like, it just made the most amazing, like custom curated, PhD course on options education and investing for me through the YouTube algorithm. And then I was fortunate enough to meet enough people and I saw an opportunity and just kept going for it. So as much as people like to be like, this guy's a hedge fund guy and he's smarter, does whatever. It's like I like to think I'm very much an entrepreneur. It just so happens that I got in this investing space.
So you had a background in construction.
Yeah.
Can you tell me how long and what you did in construction? Because if you were to ask my high school guidance counselor about a lateral career move, I would not say that they would suggest construction into uh, trading. So,
Yeah, I mean, I say that to embellish my brand a little bit. So what a lot of
mhm.
people don't know is like I went to school for an engineering degree and then I got into construction. Also, the San Francisco Bay Area is the most expensive construction market in the entire world. So there's obviously a lot of money, yeah, going around. It's ridiculous. So nowhere in the world costs more to build a square foot than in San Francisco, at least from the construction standpoint. Land can be more expensive in some areas. But like a journeyman electrician without working overtime is making like 220 grand and a foreman like close to 350 to 400 with a little OT. So yeah, construction's a big deal. Also, it's like I was in supervisory positions and doing not quite critical infrastructure, but like MRIs and occupied hospitals, like processing plants where they like clean dirty
Mhm.
scalpels and stuff in hospitals, as well as like drug manufacturing labs and stuff. So it was very much like heaviest engineering, but yeah, we wore construction vest and like looked like we were working class people and like dirty and stuff. But
Right.
like salary wise per hour, you're making more than like software engineers. You just don't have equity. But that's also kind of
Mm,
what pushed me into,
entrepreneurial.
yeah, because it's like
Mm,
you see everyone at 18 starting to make like 100 grand in construction, and then by 22 they're making 200 something, and just from choices of life and not knowing about money and having no upside from equity, there's like this stark divide between people that you're building the spaces for and other people. Whereas you look at a
mm.
doctor that may start making 400 grand, but they start out being 400 grand in debt and don't start working until they're 28 or 29.
So the time to value in construction is appealing, but somewhat to the point you were saying, there's a bit of a risk in term depending on your financial goals, right? If that's what you want to do, great. But if you want upside for long term, it's tough to do that without getting some sort of equity.
Yeah. And I think there's been a stark shift throughout the entire economy that I mean, it started in the 80s. It was proliferated more in 2008. And really, since 2020, is the return on capital significantly better than the return on labor and knowledge. Like the only places where the return on knowledge can pay you is entrepreneurship and sales. And even in
Mm,
sales, it can kind of get you because you're exposed to however much your company's doing. They can change your compensation or whatever that is.
yeah, that's such an interesting way to look at it.
And I say this as someone we've been talking about this. It's like I've been investing in my business, and we do good returns as a fund, and it's like it's starting to get to the point where it makes more sense for me to not invest in my business at all and just invest in my business because the returns on the capital are so good. And I'm
Mm,
having like, I won't call it a crisis, but I'm like thinking as an entrepreneur, and I was like, I need to like run this past someone that's way further along than I am. I was like, does it make sense to just buy more equity in my business through investing in it than it does to try to grow it and get other people's money in it? Because I basically get 5 times more return putting 100 grand of my capital in the fund than I would have to raise at least 500 to get that same exact return out of it. And you obviously have to put that money out to raise that, which has a time component to it.
when I talk about strategy, there's usually three legs to the stool. It's energy, time, money, but capital, right?
Yeah.
And it's interesting to talk to other people that are entrepreneurs that essentially your job as a business owner, as I define it, is to deal with the hairiest, ugliest, most difficult to solve problems. And then you try to delegate your staff to solve frontline or operational problems. When it comes to decision making, where you have two paths that have returns, but you have to kind of future cast to see where will the business be, or you personally be as the owner in a time period. What are some of the strategies or what frames that you deploy to help to make a decision? Because I feel like where you're at, not making a decision is worse than choosing the wrong one.
Yeah. I mean, I don't think the process of making decisions is really that difficult. The problem with that is what gets you from step A to step B. You want to continue to use that same skill set or that same decision making and do more of that. But you basically have to break that pattern of what's going to be next. And there's like this honesty of what you're doing and how you're monitoring that. And it's like, I think you should always peg it to numbers. And
Hmm.
then like I often find that a lot of people will kind of go to someone that's like definitely further along than them. They're just like, oh, what should I do? But I often get great insights from people that like aren't even remotely involved in what I'm doing, or it'll just be a friend or a family member.
Mm.
It's be like, ooh, that doesn't sound right. Why would you want to do that? And I was like, oh, you're kind of right.
Yeah, that's an interesting take because I find some people that have the outside perspective can give you more honest and intuitive advice versus if you talk to only people that are further along, they're basing off of their experience, which different
Exactly.
timelines, different stages. And while it's incredibly valuable, I almost like to hear stories from people that are further along to understand their decision making, their thought patterns versus um, I liken it to talking to my wife, for example, who does sales. Totally different industry. She admittedly doesn't want anything to do with my marketing company, which is fine, great division. But she'll give me some of the best advice because it's just blunt, honest, and if she doesn't understand it, then I'm doing a poor job of communicating it. So you have friends and people in your network that you do the same thing, bouncing ideas.
Yeah, or it'll just be like small things or conversations with other people that aren't related to anything,
Mm.
and then just be an insight.
Oh, Mark, I think your mic died. Still dead.
Okay, this is fine. Better
I
now?
got you. Yeah, better now.
Okay, perfect. Yeah, I mean, there's always some insight that comes along, and I find like one thing I've been playing with my mind is like you have to have the habits to kind of seek to be the best and like find out every problem and be talking to those people that are above you. And then you also need to have the humility to basically realize that everyone you talk to has some tidbit or something that they're superior to you in, and it's your kind of job to find that through curiosity.
Mm. Yeah, I mean, look, I am never going to, well, never say never. high likelihood I never do a game show where someone wins $5 million from some sort of contest.
Yeah.
Mr. Beast does, and I'm sure I could learn from Jimmy quite a few things about how to be better at YouTube. Like
Exactly.
everyone has a skill set. So back to your approach about math. It's interesting. So when you say construction, that was the industry, but your education, your process of thinking is that of an engineer. I love talking to people that are engineers when it comes to process because I always leave the conversation with something, fresh. But how do you do testing in your business when there's unknown variables? How do you approach the scientific method to say, all right, here's thresholds for we're going to try this out, measure the efficacy, and then make decisions afterwards? Or
Yeah.
go ahead.
Well, I think the way to think of it is like you always think of it as a machine. So like you're putting in money, you're spinning the money crank, and then you get out the crank. So it's like if it's inefficient, adding more leverage arm to the lever arm is not going to do anything for it. And then oftentimes there'll be several variables in it, but there's one variable that we'll say is like squared. And by using that, it'll multiply all of the returns. But it all starts with your honesty of what's going in. And then I think also breaking whatever the societal path is. Like we were talking earlier, where people can be running a software business because they want to get an exit or something. So all they do is they talk in terms of ARR. And when you program yourself and just constantly follow that ARR, you're allocating scarce resources and times for something that may not service you, or you're approaching a goal that you made for yourself several years ago when you were a different person at a different time. So, like, what I'm looking at, what I'm doing specifically is like I'm married to my plan and my P&L curve, and like I just want to get what I bought. And this could be applied to anything where it's like if I hired a contractor, it's like I know how much money I'm paying them. So what am I getting bought? Like we're not running a strategy, like we're running a strategy to try to get to results or KPIs. And then it's like, how close are we to those? And then if those aren't giving you the results, then it's time to, iterate and change that. And you go back to the honesty, component of it. With what I'm doing, it's quite easy because like numbers wise, and this is applicable to all businesses, it's like there's two types of numbers things that you're doing. And I think people need to have a big understanding of what the difference between those two are. So there's inputs that are like extremely exact. Like we hire a person, we get this many marketing leads, it roughly gets this many demos, and we close 10 whatever percent of it to get
Mhm.
ARR.
Yep.
And that's just like very straightforward. Then there's some type of outsized thing where it's like if we go into this new market and that is on our book, then we could potentially double our multiple value with it. So the probability of those two things are completely different. And I often seek that people will pursue the one that has some outsized, very, very uncertain return that's maybe 2 or 3 years out in perspective, and then try and benchmark it to these like really precise multiples just so they can feel like they're on track. And with what I'm doing is I'm basically outploying hundreds of trades a day, millions of dollars in, capital to turn over as fast as I can to get a huge velocity to it. And if I just do all those inputs correctly, it's like a machine, and I'll be 98% accurate where I'm supposed to be within 2 to 3 months. However, then there's like for me the risk component, which is even though some exogenous risk event may happen once every 1, 2, 3, 4, 5 years, and you can kind of think of it on a gradient, like the 1 in 5 year event gets worse, kind of like a flood. It's like I need to protect against what that is, even if it costs me and it may make no sense financially because it could keep me afloat to keep my business going. And people need to think about their outsized bets for what that's going to be, whether that's protecting against their downside risk or leaving themselves open to some upside risk. Whereas if you're I really like to push on tech companies in particular, where it's like if you take on a bunch of VC funding, it's like you've already written what your game plan is for the next 5 years, and you're only playing for that big output. And now all your little stuff, it's like, cool, you're not really going to make any more money throughout the path of that. So I think people need to look at two systems and how they're different. And if we kind of look at this, there's like three types of business owners. There is a artist, which is I love marketing. This is the best thing. I get so fulfilled from helping my clients.
Sure.
Then there's the entrepreneur that's just in it for the money and they can take the risk. Like they're just here for capital. And then there's the manager leader who's like the operation, the crank. And you need to know which one is your core and you need to know who complements you for the other one. And I feel having that structure is generally a good start for what people are doing. And hint, hint, if you're an engineering type, you probably need the sales social person. If you're the sales social person, you probably need the product engineer guy.
One of the things that you mentioned on approaching allocating resources in long-term strategy, I want to make it an example towards a sport. So an easy to understand is baseball. So on one hand, it's like, do you measure your on base percentage or how often you get from, at bat to on base, which is your more safe bets, and then higher velocity, trying to increase that. But then at the same time, you need to have a plan or some allocation towards trying to hit a grand slam home run. The nice thing about business versus that analogy is you could essentially the grand slam
The
in baseball is
1,000 payoff. And
instead of four runs, you could get 400,000 runs.
yeah.
And instead of, just on base, you can incrementally do that at a much higher velocity, especially when you're doing the frequency of activity that you're doing. What are some ways I want to talk about in general for entrepreneurs, people that are interested in increasing their wealth, that you can talk about the path to financial independence for anyone on a long enough timeline? Because what I hate to hear, and I see it too often, especially from younger um, audience, is they want to, in 90 days, buy a Lamborghini from zero capital, as an extreme example. But if they had that same, desired financial status in 10 years, the likelihood they can get it increases. So how do you approach financial independence from a big picture, using 10 years as an ideal benchmark? And then what actions do you take in the short time, or would you suggest others taking to help increase their likelihood they would achieve that?
Yeah. I mean, I think it depends a lot on where you're at currently in your life and where you're trying to go. So the whole Lamborghini thing or whatever that is, like some people could have skill, but if they have that, they're taking some incredible amount of risk and other people are lucky. So you just need to get past that phase as quick as humanly possible. And then the other thing that I think a lot of people don't talk about is the benefit of compound knowledge versus compound interest. So like, okay, everyone match like your 2% your 401ks, but like if you were under 30 and you are actually trying to like make a move, it's different if you're a government employee or you're just like a nuclear engineer and you're forever going to do that. It's like match your 401k and then take the money you would have put in your 401k and invest it in you gaining some type of skill or giving you the runway to take some type of risk. That's like, I think we've done a huge disservice with people going to college and like taking out the loan and like they could have bet on that someone else. It's like you're already doing that throughout all the courses of your life. You might as well intentionally do it. You're just doing it in like a really shitty system of college or, I'm moving to the big city. And then like you also need to go to a big city. So New York, San Francisco, like you should go there. They'll chew you up and spit you out like one of those so you can start to figure out where it's going. That'll just overall up the level of what you're doing. Then in terms of like wealth wise is what a lot of people get wrong is we have a huge amount of recency bias. So the word for it is called like ergodicity or ergodic. So ergodic basically means that like each instance in a cycle is unrelated to the other. So the example of this would basically be if you were to play Russian roulette, you may play it once for $1 million payoff, but you would never play it 6 times in a row. So playing it 6 times in a row, you're guaranteed to lose because you're one person doing it through time. And when we're investing and through our journey, we're not living 1,000 simulations. We're living one of our simulations through time. So you always need to have enough cash because the best yields will always come when you have money and no one else has money. So like 2022, 2020,
Right.
2008. like I used to work with a guy who, again, dumb construction worker, but he's someone who obviously kept his job in '08, and he bought like a 3,000 square foot house in Lake Tahoe for 62 grand in the midst of '08 of a foreclosure. Yeah. Um, and like when people are chasing this
What
yield,
is that worth now? Sorry to interrupt you, but like
like
that's it.
one, like 1.8 to
What?
something, you know what I'm saying? Like
Oh
insane.
my God. Yeah, I
Yeah.
love that analogy because it's real for people, especially that listening that are investing in real estate. It's like, hey, if you have cash on hand, don't look at the 60 to 90 days. Oh no, the market's going down. That 65 is only worth 60 now.
Yeah. It's like, it'll be obvious, trust me, like when you should rip it. And then like, I think a lot of people realize this. So since 2020, your bank account looks big, your stock portfolio looks big. You're not ahead, even though you're making way more money because everyone's participated in that. So having the access to counter cyclical assets that go up when other things go down or like a huge benefit, and not being locked up in a real estate or a VC or whatever it is. Like you can't be chasing the fancy stuff, but in general, like the advice I would give to people is like you're best off focusing on one thing, which would be yourself, to get into and select a lucrative industry or start your own business, and then find professionals that could help you invest. But in order for you to do that, you need to understand enough competence within yourself to do that, because then you're getting to your strategy of playing to win or playing not to lose.
Is that how you started your business where you were, stashing away runway as an engineer and then waiting for, enough runway to have the idea develop? Or did you wake up one more? I very much likely don't assume this was the case, that you just woke up one morning and said, I'm going to do this. I'm assuming it was a well-intentioned, thought out process, but what was it like making that leap?
Yeah, so like I had bought a bunch of real estate in Austin in like 2018, 20 through 2020. Obviously that worked out well, but it ended up kind of going against me with weird tenant rules, bed bugs, and all that stuff, even though I made the perfect investment decision. This is multifamily. So cash flowed up front. I got the low interest rate. And I thought I was going to have all this runway. And I thought, I was like, oh, I'm 28 and I have 15 grand in income a month. But it was like it all went against me. And I realized at that point that, I was just trying to make money off of money and I wasn't able to make a business out of it. And when it turns, since I wasn't a professional like financier or money engineer at that point, I was again just riding the wave like everyone else.
Sure.
And at that point, I like was like, okay, whatever. I'm gonna take a remote job paying me 48 grand, going from like a 200 grand salary in San Francisco. And San Francisco was like, sorry, you got to get out of here. You're too poor. You already told your boss you were gonna like be a real estate person. I couldn't get my refi. And then I basically just started working. So like being very product driven and engineered focus on like how do I get really good at making a money machine, whatever that may be. And part of that was learning how to do, a 48 grand SDR job in 10 hours a week and automating it, doing all
Oh.
that stuff. And then the other part was like learning trading also, like to a real
Mm.
standpoint. And then I obviously met other people, did that. I was like, and then I got to a point where I just developed enough of a belief in myself to pull the trigger. And I'd kind of realized this where like I was at a Tony Robbins event and then they were like, think about all the things you could do with money or whatever you could do with money. And then I kind of realized that like my my mom had kind of had a generational thing around scarcity with money. It's like they were
Mm.
immigrants. My grandfather worked hard, but my grandma like spent a lot of money and it strained on my grandfather. My mom was like a grandma's boy. Then my dad had went bankrupt into business when he was older, and then it affected where my parents could live when they had kids. So it was obviously always a stressor in their relationship. And I
Right.
was like, oh, I've been carrying this for however many years. And I left scarcity at that point. But like I had the true belief now that I could always make this money and figure out a way. And
Interesting.
even if I wasn't able to make the money, there'd always been help, and there always will be by loved ones in your life. And even when there's no one there, like you've been able to help other people at that point. And I was like, okay, I got this. And then I kind of went crazy and spent like over 250 grand a year on self-development, business stuff, and starting a business. Yeah, it was,
Whoa.
yeah.
Whoa. So hold on. I'm going to put the brakes on that. This is
Yeah.
important to unpack.
which was
I
also like all of my money at this point. That was like,
You went 100%. So you basically went to a Tony Robbins thing, if I understand the timeline correctly. You successfully identified some of the limiting beliefs that you more or less inherited from growing up and your upbringing. And then you're like, okay, these are what they are. They're limiting beliefs based off of a lived experience. And then you went all in 250K in personal development. That's pretty accurate?
yeah. And I also want to make the shift. What I've kind of identified is there's two people that get to points. It's like there's people that don't believe in themselves. And I'd already been studying finance, been interested in business for like 5 years. I was the entertainment entrepreneur. I listened to it in my car and was like, I could do that shit. And then I go back to work for 40 hours a week the next week. You know what I'm saying? So like I
Entrepreneur.
firmly believed I had the skill set and I was already doing everything I needed to run a successful business. I just had no clients and was not doing it at scale. So releasing the belief, and this is still the thing I'm working with, but you can see I'm much less happed up about it, is like if I would have just continued trading like my two houses and worth of savings when I left, I've been doing roughly 45% a year. So I'd be sitting on like 2.5 million right now. Instead, what I did is I put like 600 grand in my business, leaving everything else. And now I've gotten to the point where it's okay. I think I've handled this business thing. I think the business got a size. Now, like, let's just play the money appreciation game with what I'm doing. So that was a big shift. And this is always what's going to stop people from getting the next step is like psychologically, someone that could trade at that rate. And as a hedge fund manager, like it was a big shift to be like, why would I spend money when I could get a 40% return on capital with no responsibility, no risk? So like the risk of me trading was building a business more than it was like, oh, I'm going to outlay this money.
Hmm. Interesting. So it's not like traditional conversations of risk tolerance where you're feeling this emotional, how comfortable do you feel with taking risk? Your appreciation or outlook on risk is more, how do I get a lever long enough that makes the time and effort that you're going to put in, at the end of the day worth it? It's like you've identified leverage points.
Yeah. And also, what's the pain and uncertainty you can withstand till you want to start to cash in on some of that delayed gratification? This is also why I like to preach a lot, have your cash. And you usually just run out of your cash. Like you always hit these not saying people should get leverage, take huge risks in business, but it's like the time constraint of when you're basically out of money, like you kind of need that to really get honest with yourself. Like what I like to tell a lot of people is when you have a really good idea and you're serious about doing it, it's like I just call it the unplanned pregnancy method. It's like if God gave you 9 months to figure out how to have a kid and support it, like you could figure out all that shit. You know what I'm saying? So just knock
Yeah,
yourself up and do it. And
that's some real shit for everyone
yeah,
listening.
and anyone who's had a kid, it's like it's that same feeling, butterflies in your stomach, like oh shit, I don't know what I'm gonna do. But like
Life
you're
completely changes. And they think it's
yeah,
right when the
yeah,
baby comes out, but it's
yeah,
really when the
yeah.
baby is unknown that it's going to come out. It's when life changes.
Yeah, you're coming from a loving place. And this is part of I don't know, I'll call it the entrepreneurial treasure map. It's like first you need to get honest about where you are.
Mhm.
And then you need to have a clear, compelling vision of where you want to go and why you want to get there, which is what a lot of people forget. But then the gap of getting from where you are to where you're there, what separates that is emotion. So, like, people will come from places of greed instead of ambition. The person that wants to get rich in 90 days. It's like, if anyone knew about investing and compounding, like, obviously, the richest you're ever going to get is further down the road from effectively doing nothing. You know what I'm saying? So, you would never go for that 90-day thing. And understanding what those emotions are quite the shift. And another like quick shift that I'll tell for people too is, curiosity is like the absence of judgment. If you ever think about that type of thing. So it's when you can shift that judgment about yourself or that judgment about how the world is or whatever that belief is to curiosity about it. And then you can make the step to the next level. It's just most people need to hit rock bottom or like get left by someone or do something extremely polarizing. But the more you kind of just respond to going into that, the quicker you're going to get at iterating on those problems. Where I know a lot of people in, the entrepreneurial space, it's like there's so much information out there and you'll eventually figure it out, but you have to come from the right place and then people will kind of come in to help you. It's a little more woo-woo and stuff that's going
Oh,
on. Yeah.
the term woo woo in spirituality or religion or theology different than in personal development when you're
Yeah.
trying to do entrepreneurial coaching and mindset shift. I'm not trying to argue that point, but I understand what you're saying because it's like an intangible, but there's probably some studies out there, I just don't know them off the top of my head, that have measured people that have adopted an abundance mindset versus a scarcity mindset and their trajectory in business. And if there's not, then I urge anyone listening to this to go and do the study.
Yeah. And the other thing I tell people too is it's like, you want to open a business, like, do you tithe the first 10% of your income? I was like, you don't believe in yourself. Like, I don't
Mm.
believe in you. Like, until you're willing to just give the first 10% off the top, it's like, that's literally the entire active business is like trying to do something as a service and then paying people before you get the output, where the employee is the exact opposite, where it's like victim that gets the money before they put the output out, you know?
So interesting. There's so many ways I could follow up on that question. I think the first way that I want to follow up is just kind of tell a quick story. So I also had an immigrant mother, and I grew up, and she grew up, in an entirely different time and view on money, where family like strapped for money, it's very scarcity, hold on to it as much as possible. And I would say 99% of the people that I'm aware of on her side of the family either had government or set state, 40-hour weeks. Like
Yeah.
this was the plan. Whereas on my father's side, it was the opposite. It was like almost everyone I knew was a business owner on my father's side, or sales, commission sales. And that mix of both was a crazy environment. So what so I can relate to your upbringing and the limiting belief. So the last thing I want to mention is when I did an analysis, I like to do, before the end of the year, quarter one reflections. I realized a positive correlation between investing in professional and personal development with myself and then outsized returns in my business as a consequence, whether there was a one-to-one causation or just correlated. So then I've then been incrementally reinvesting into my own development. It sounds like you just went full send right out the jump with 250K. How do you think people should look at their professional and personal development as an investment? Right. So that maybe is a woo-woo interview question, but I think it's an important one.
Yeah. So first of all, as someone that's done that much, there's definitely a diminishing return to it. And you start to get to the point where like you're going events to figure things out. And then you're honest with yourself and you're like, oh, I just need to like actually work now because I've been like getting so hyped up and everything. But I would say the main thing is like when you get that excerpt of some limiting belief, like I was talking about, it's like that's what you really wanted. And I could have basically gotten enough from that. And I took like one or two small business things that I really enjoyed, like weekend type things. And then the rest of like that whole year following the Tony Robbins thing, volunteering, it's like it like buried me. And it was like far too much. And I'd kind of gotten the majority out of it, what I needed for. But I would say like if you're stuck, like if you're thoroughly stuck, that is like a good call to look into that. And the other thing that a lot of people get wrong is, you need to be like this more grounded person. So another concept that they have, I'll relate it to dudes because judging by my algorithm, I'm assuming 95% of the people that listen to this are men, but
Probably
uh,
accurate.
yeah. So like there is this thing called like the masculine archetype, and it's based off King Arthur's round table. So there's like the knight and the warrior, which most people spend way too much time in, especially guys, which is like, I'm gonna figure this out, I'm gonna break this wall, I'm gonna do this. Then there is, yeah, then you get it. Then there's the magician that always knows, there's the lover, and then the king is like the best manifestation of all those combined. So like whatever part you're not watering is usually the part that you probably ought to go and like water that and whatever that may be. So it may be taking a week off and going on like a vacation. And for part of that vacation, you're just like, one day I'm going to do some weird stuff. I'm not going to like sit by the pool and drink margaritas. You know what I'm saying? Or you realize that when you're at a conference, like you need to spend more time in nature because it helps you think. And you eventually need to leave the conferences, and it gets to a point where it's just your habit to go on a walk on Saturdays. And like that replaces going for the week or 2 long retreat. So you're trying to graduate out of that self development. But if you're not doing anything and you're sending money to your 401k and you've had a yearning to do more, it's like spend more on dumb stuff, and also don't even view it like it's a waste. Because I've taken some dumb self-development stuff, but I've gotten it exponentially outsized returns from certain ones of them. So like 20% of it, all that stuff, complete waste of money. You like I'll even walk out, you know, and then 60% of it, you sit there and like you're going to get something for it, work the process. And then 20% is just like that 1,000x return. So like you're kind of chasing whatever that is or whoever you may meet within that. That's kind of more
It's a true bell curve.
yeah.
Man, that's interesting. To go on to that, looking at how you invest in personal and self-development, what are some things that you invested in, not just with a business operation, right? I don't want to necessarily ask you questions on like what stocks did you pick or what industries are you trading on? That's a little bit more tactical than I want to ask at this point. But what are some of the things that you've done to invest in or try to grow your business, whether that be a marketing campaign or investing in employees or contractors that you know, that have been successful and that have been successful lessons?
Yeah, so I've had a little bit of a problem with this. So, I mean, I like contracted out legal service and accounting. That's obviously important in my industry. And like that's pretty good, but still it's like their customer service kind of could use a little work and everything on the software is done on the back end. And then I tried to get like a lead list off of like Instagram ads that someone was advertising to me. And I was like, hey, if they can advertise to me, I'll do it. And they ended up basically just stealing my money. Like I sent it to them. Yeah, they're like they were based in the UK, so it seemed legitimate enough in London, you know. So
Mm-hmm.
I sent them 10 grand. They like I had 3 sales calls with the guy. It was pretty good. And then there's this weird thing where it was like this guy asked me for money. He sent me a copy of ads and they looked like a 3-year-old did them. And then they're like, do not send money to this person. Like we've had a disgruntled employee. Like do not wire money to him. Please let us know if you did, like whatever. And then I asked for a refund and they were like, if you could just understand finance is very busy after all this stuff. And they basically tailed it out for long enough that by the time I was like, hey, how do I get my money back? Continue following up. They were like, please just dispute it on your visa, which also makes no sense. And then when I did that, it was already so late in the thing and they knew exactly how to beat that on dispute. And then it was basically past 60 or 90 days. And I kept following up and I was just like, fuck it, I lost 10 grand. So like that's the online scam thing that can happen. And then I was like, okay, I need to do this stuff for myself. I hired some guys in town that were kind of doing like a startup agency model. And I was like their first real client, and they were like helping me. And it was really helpful at the beginning because they were helping me clarify what I was doing, which at that point I was not near as business savvy. And then just how they were compensated. I kept them on the payroll for too long and they weren't providing a huge amount of value to me. Like they were
Mm-hmm.
solving problems for me that they had not yet solved yet. And they didn't know about my industry, which is like a huge problem.
Mm.
So you really need to find the right people. And then now I got a good video editor. They referred me to like a speech coach and whatever. But the main thing is like one guy told me this in the entrepreneur group is like if you wake up 2 days in a row and you're thinking about them and they're not making you money and they're not fucking you, like they gotta go. And I was like, that's true. So
Mm.
that's how quick you should be firing people, especially contractors. Like if they're
Yeah,
not,
I have found that not just my own experience, but
yeah,
of others, it's way more often that they've held on to bad help for too long than too short.
yeah. So like fire quick. And same thing is like you're going to hire bad employees, but when you get the good one, it's worth it 100% and like compensate them well when they get that to you. But it gets more obvious. And another thing is when you're cash flow rich, you like spending the cash flow to grow because you want to play business and whatever. And I think that's also a huge fallacy that Silicon Valley and Y Combinator has programmed into our minds, where that's not actually how you should be running your business. You need to be this allocation private equity person that's just like lay them off. Nope, doesn't make sense. Get rid of it. Not our core competency.
Yeah, I would say I want to talk about private equity next, but my background in private equity, I never would have thought prior to, but what is the number one way that I've gotten better at marketing in my whole career? Like you said there's the three archetypes for marketers, right? Just as an example, there's the artist, there's the entrepreneur, then there's the operator. I think I started as the artist and then I moved to the operator. And if it wasn't for private equity experience, I don't think I ever would have gotten the mindset right for an entrepreneur. Um, but with that being said, um, what are some common, how do I say this? Within that space, from your point of view, what are some topics that people should be putting out in the market in education? Because I feel like there's the guru of an industry that tries to label themselves as like the sage wisdom that has its internal knowledge. And then there's the other end of the spectrum, which is super value driven and tactical and helps audiences. How do you look at, building a personal brand in your space? I guess is one way to ask that question.
I mean, you got to speak towards what you're about. And I would really push video above all of that because it builds far more trust, like much more so than ads or whatever. But you also need to know what you're doing. So there's sales and marketing type people that run businesses where they're like, this is kind of a commodity, or we're selling a feeling or want, which is a great business. And they just really do that. Like the example of people in the financial space, it's like meet Kevin. Meet Kevin's a sharp dude, but he makes an insane amount of content every day. It's like clearly this guy is not like
Practitioner.
there's a massive amount of better allocators and finance people out there, but he's being like, hey, in 10 minutes or whenever you want to tune in during the day, how do I educate you a little bit on the financial market? So then there's the engineering driven person or the product driven person, which is just like, how do I have the habits to build the best possible thing ever out there? Or I'm going to go from 0 to 1, or there's some new opportunity that does that. So when you say that, people will find you. And the reason I recommend YouTube is because YouTube's, some $1 trillion algorithm from Google or whatever. And if you put out great information, like I have 3,500 subscribers, I think, and I probably talked to like another dozen hedge fund managers. It's like, usually I don't watch stuff on YouTube, but your stuff came up and I was like, oh, I think this guy actually sounds like he knows what he's talking about. And like the chances of that, don't quote me on the exact stat, but I think there's like 2.6 billion active monthly users on YouTube, whatever. And it's like,
Sounds right.
there's
And
probably only,
China doesn't have YouTube, so there
yeah,
could be much more.
yeah. And there's probably 1,000 people that do what I do at a professional level. And and YouTube was like, hey, come and watch this. So I've taken a much different approach where it's like I am just trying to be thoroughly the best at my specific niche, and I don't really want to step in other stuff. And by getting better at this, like stuff will come plugged into it. And I also know like I have a speech coach, I have a video editor. So like all that's going to be an iteration that slowly gets
Right. So
better.
your skill is iterating over time, but your niche is you're going deeper and deeper to solidify your spot in that niche.
Yes, I am trying to dilute my niche as much as possible now. So, you got to know your target clients. Like the client I've mainly been going after is what I call the fallen angel, which is people who trade options and mentally they can't do it, or they're just too quick, like they're squirrel, and
Hmm.
they do that. And then they
Girl with the
basically,
red dress is a Matrix
yeah, come
analogy.
in and I do it. Then there's like Busty Boomer who's like close to retirement. They know they don't want to be in the S&P. They have money. They make a lot of money at work. They get what I'm doing, but they don't have the time for it. And then the next one is like private fund Phil or whatever. And I need to make it more broad for what that guy is. So it's like I'll probably
Hmm.
start making some stuff where it is, oh, what's an option? Well, to think about an option, it's like when Taylor Swift sells tickets, they're $300, and people on Ticketmaster will buy them to try to sell them for 500, and that's called the premium in between the ticket price and what that is. Those are speculators. The people that bought the ticket and hold it are basically hedgers,
Hmm.
and you can make money on the transactions between all of those people and never really hold the risk for a long period of time, and you're serving a purpose in this chain. You know what I'm saying? And if you're buying the bottom of Taylor Swift tickets at the entrance, but you're also selling them at progressively higher prices at something that you can guarantee you can make money at, similar to running like a, gambling book at a casino where you're moving the spread. It's like that's essentially a good business and what I'm trying to do. And similar to someone invest in real estate, they fix up the place. This is like trading the premium over time. They get the rents up and then they refinance out for an exit. I'm doing that just on a 1 day time frame, which mathematically is a lot better, and we don't have to deal with tenants,
Mm. Yeah, that's
much
interesting.
better pictures, stuff like that. But that's kind of the new, you know, area that I'm pursuing a little bit. And when you're doing that brand, it's like you can make a huge amount of money if you can monetize a small group of people that you're specifically speaking to. It's like I met a dietitian at the Alex Hormozy scale workshop. I think he's posted on some videos where it's like she makes like $1 million with like 700 Instagram
So you
followers.
met her in person? Because
Yeah,
I
yeah.
listened to the podcast and I saved it and shared it that said she only had a couple thousand Instagram followers and makes like 7 figures take home. And you met her. That's legendary.
Yeah. And it's like I have 3,500 subscribers and I've raised close to 8 figures just from that. And I
Yeah.
don't even ask for a sale. I just have a link that's to my website that
Right.
you can call with me.
Yeah. I mean, it's really about creating your tribe.
Yeah.
And what's the arbitrage of I think for some businesses that are different than these B2B services, right? The largest umbrella, I mean, we both offer B2B services, but people are like, oh, do you have an ad funnel? Are you doing Google ads? Are you doing Facebook ads? And I'm like, the amount of capital that I would have to risk to do a long enough test is way above the threshold because I know I could just spend that and make like several dozen videos that are what I want to create. And it sounds like you've landed on a similar conclusion where it's like quite literally having a voice coach by putting your voice out there and attracting through inbound and through your content, but there's an element of outbound with the discovery. You've been able to, do what you've done in business. So I think um, my marketing hat is tipped to you for accurately identifying some constraints and solutions to business
Yeah.
growth.
And the other thing is like, it doesn't feel like I've been successful. Like, you know what I'm saying? Because it's just such a grind and iteration of going through it. But like, I do recognize there's been a huge amount of progress. And you also need to know, again, it comes back to like, who are you talking to? What's your business? So it's like, if I was a chiropractor, like, it's not really a alpha driven engineered product. It's like kind of a convenience and a feel. So you can make content about your structure to sound like the most intelligent chiropractor there is out there. But the thing is, you don't have like these audited number returns, which are my product, that
Mhm.
back that, or it's not something you can do on scale by you being the best at that guy and like charging more and more to work on people. So that type of business and how you market it, that's going to be much more of a ad funnel type thing. So you need to understand what that is. Like personally, in my opinion, what I'm talking about, it's like I would never use ads because for a 6 figure ticket size for some relationship that I'm looking to last, you know, decades,
Years,
hopefully,
decades, yeah.
like I'm not going to run an ad. Like, have you thought you could do this? Like jump cut. Like obviously I'm not going to do that. Where
There's a correlation between the content that you're marketing, your creative, and the length and the lifetime gross profit of your audience. I think you need to have longer form, more educational, more deep content when you have longer tenured relationships that are higher ticket to really influence trust because it's so you couldn't handle 1,000 new customers a day, I would assume.
yeah, in the I could. Yeah, I could. I mean,
Maybe.
if I could still monetize by the size I would. But the example I really like of this is Ben Patrick and Knees Over Toast guy, where it's like
Mm.
he had been grinding how to fix this problem for himself and actually became the absolute expert on what that was and jumped into the space at the most crowded, convoluted, like fitness space, the most crowded, convoluted, clicky base space on earth in 2020 at its most crowded time when everyone was getting paid to try it. And like absolutely blew off and whatever. And it's like, I know he's not Alex Hormozy or some private equity guy, but that is amazing. And I remember seeing him stuff and like trying some of it out of the gym. And it's like, I will just religiously purchase his shit because I trust him so much. And it's just been so good, like across everything. And I like people come up to me at the gym, they're like, knees over toes. Like, how's it going, man? I just found him, you know? And it's like that type of marketing, I think we talked about, it's like that's farming. It's like his brand is so good because it's so damn authentic. And it's like he doesn't take steroids. He says he only works 3 hours a week. It's like his pregnant wife's been on the videos and his mom for, 5 years that aren't fitness models or whatever. And like that, I think is the epitome of what a personal brand is, like what I would aspire and like done it
Interesting.
all right, chose to source things in America, even though I guarantee it probably made less money and stuff.
Mhm. Yeah, I mean, you hit the nail on the head with authenticity because the very tough to measure in a KPI dashboard, but it's easy to feel is brand sentiment or trust, right? It's very clear that for that example, super high brand sentiment, super high degree of trust. I guess it would tie back and relate to your sales funnel, like you said, how many opportunities to close. That would be an amplifier to increase the conversion rate. But my last question on specifically YouTube marketing is what is your long-term vision on like what you want the channel to be? Are you going to just increase the length of time that you keep investing, or do you have any other plans to, either increase the volume of content or reinvest in, in another way in the YouTube? How do you want to grow the YouTube marketing aspect?
Yeah. Also, last question. I have to jump on a call really quick, but I'll answer
Yep.
this. So, like, I like to look at it. So initially, it's just get enough leads, give so much, and give so much information to where financially the flow of the capital just from in the business is so good that I can kind of take much more of a step back and reevaluate. And then a lot more of that would just be, I think, a little more personal brand that it becomes viable enough to where people invite me into their network to speak on other topics. So
Mm,
even though I'm the hedge fund specific zero DT option trader guy, and I speak a lot about that, it's like I do know a lot about other financial topics and give, a different view from where I've been. So I think that could be beneficial on what's going out. And I think a lot of things in the financial space is there's talking heads that they don't really know that much about what they're talking about because they're just repeating a message for the marketer brand. And when you see two people that are in the space and talk to one another, you can kind of see not really a hierarchy, but like what is more authentic in that
hmm.
message. You know what I'm saying? Like
Right.
there's this one guy, I forget his name, but it's probably better I don't mention more. He's like really big into touting Bitcoin and he's like a financial advisor. And it's like, dude, clearly like that's not a good place to hold more than 10% of your capital. Like where he's like, Bitcoin is the new standard for the benchmark, not the S&P. And then it's like, yeah, man, like you can pitch that and it's going to grow. And he's like holding Bitcoin focused events and whatever. But like that's the guy who went from like Web3 to crypto, or and like they just constantly go to the next thing and like are just jumping around to be
He's
sales.
taking keyword research way too literal.
Yeah. But he's got a great brand.
Yeah. So last question. I know you got to jump. Where can people get a hold of you? Where can people find you to follow your
Um,
content and, you know,
Yeah, you can go to my website at MBH Capital Management. Look me up on LinkedIn, Mark Anderson, or type that in, it'll pop up. I'm also Zero Day Mark on YouTube. And yeah, all my links to everything is there, so it's pretty easy to find me.
cool. Thanks so much, Mark. Have a good one.
Thank you.
Cheers.